Hello, Arizona, and welcome to this episode of Valley of the Sun Real Estate Show. I'm your host, Jason Bates, and I am living in this beautiful community that we call Phoenix, Arizona, or Valley of the Sun Real Estate. Well, not Valley of the Sun Real Estate, but Valley of the Sun.
Welcome back. Yeah.
Welcome back. I am Rusty. No question about it. Hey, if you want to reach out to me, please do so by visiting my webpage at www.valleyofthesunrealestateshow.com. From there, connect with me on any social media. If nothing else, connect with me on Twitter. I'm trying to grow my Twitter followers, so please connect with me on Twitter I post all kinds of stuff real estate related on Twitter, not so much on Facebook, but definitely on Twitter. You can also call me if you're listening to this on iTunes. Please write that review, as it is one of the only ways that it helps me improve the show. So I appreciate your feedback. And a little tidbit here, since I've been on vacation here, and I know I released an episode last week that I pre-recorded, but I am on Google Play and I'm also on iHeartRadio. So for everybody listening out there on iHeartRadio, thank you for choosing this podcast over all the other real estate podcasts that are out there. I really do appreciate that. So let's.
You know what I think about when I hear iHeartRadio?
What's that?
Taylor Swift.
Taylor Swift. Yeah,
she's always on there. So they have us or Taylor Swift. I'm glad they chose you.
Hey, speaking of which, Stephen Cotton is joining me once again. He was here last time, right? But he's with us again this time, and we are going to cover all of July's top real estate newsmakers. But before we do that, Stefan, why don't you give yourself a plug and tell everybody how we can get a hold of you?
Oh, yes. You can get a hold of me on a couple places. My website is, it's a long one. I'm going to change it. We're going to make we made talk about this last month. It's new-homesphoenix.com. That's our website to look at houses burden-free or for free, get your own MLS search going. My phone number is 623-236-5843 if you want to chat, text, tweet. And I think it's Cotton at Stefan. Cotton_Stefan is my Twitter handle, but I just tweeted out a link. So if you're already there, then hopefully you come and join us. I think that's everything. Facebook, I'm all over the map. Just text me and I'll hook you up.
There you go. All right, cool. So we got a lot of news stories. Obviously, there's a lot of big things happening last month that can affect real estate. Before I want to start off on a little bit of a light note, though, in real estate. And when we talk about big things happening, this is probably one of the biggest things that happened worldwide, and it's kind of a lighthearted thing. But Pokemon Go.
Yes.
Pokemon Go seemed to hit the stratosphere last month.
I broke that story. Remember? I said, hey, This is going to be a big deal.
Yeah.
Because some people were using it for open houses and stuff. And we actually used it for an open house too. Because there was 2 gyms or 2 hubs near us, and then 7 hubs and 2 gyms near us. So it was nice to just be able to market and say, come on over and catch your own Pokemon. But yes. So
yeah. And speaking of which, there's a real estate broker who the headline here just kind of caught my attention. It says real estate broker hatches evil plan to catch Pokemon crazed New Yorkers. So kind of like what you were talking about, right? The having the open house and having that maybe near Pokemon. I don't even know how this thing works, but I guess you collect different swords and I don't know.
It's different Pokemon. I'm going to give you a little lesson about Pokemon. It's short for Pocket Monster. Did you know that?
Oh, no, I did not know that. Pocket Monster.
So, yes. I've seen the cartoon. I don't DVR it, but so what you can do, I'm going to just explain it really quick for all the other realtors out there, is you can kind of create a gym near your house.
Yeah.
And then the kids or the millennials or the people that have grown up with Pokemon 10, 15 years ago that are adults now, they will come to you. So it's kind of like a horse to water, if you will. They'll come and try to capture these Pokemon that you have. I think there's a couple hundred. I don't know that. Pikachu, that's the one I know. And there's one that I think has fire.
Yeah,
Pikachu.
But it's kind of crazy, right? Because a lot of people, I've seen car wrecks because of Pokemon. So it's kind of a craze. I don't know how long it's going to last. Nintendo stocks went up because of it.
Yeah, that's what I broke. I said in 48 hours, it went to like $1.75 billion higher in value. So when they broke it, I don't know where it's at now because I should have followed up with it because it's more of a July story than it was a June story. I have a friend his name is David, over in Portland.
Yeah.
And what he did, I'll just tell you a Pokemon story. He kind of hid out behind the bushes, and then people would show up to collect these Pokemon, and then he would fight them, because you can do a Pokemon fight, not like fist fight, but Pokemon fight them. And so he would steal them somehow. I don't know, but
On the phone, like you're doing a phone fight.
Yeah.
Kind of thing?
So like the kids would show up trying to collect these Pokemon, and then they would have a battle, and he's hiding behind the bushes. So they're like, "Who's battling us?" And so he said he did that for like 3 hours. What a great waste of time, or a great a great use. I mean, you go out and walk. There was a get people walking on parking lots, not looking up. I mean, if you thought texting was rough, then it's fun. I don't know.
Yeah.
Dangerous.
Yeah. If you're texting and walking at the same time, I've seen people fall into fountains and all kinds of stuff. The same thing. I mean, people are getting in accidents and everything over Pokemon, but leave it to real estate or realtors to try to leverage that to their advantage. There are realtors out there doing it. So if you're out there home hunting, check your Pokemon Go. You may get a Pokemon.
We had one in our bedroom. My wife downloaded it, and we found one. We caught it. So
in your bedroom?
Yeah, it was weird. She downloaded it, and there was one in there. So she's caught in one. So they're everywhere. They're everywhere.
Everywhere. They're multiplying. Okay, so the next thing here, this isn't really anything here in Phoenix or anything like that, but I thought this was kind of I don't know if it's a sign of the times or not, but David Copperfield. Everybody knows David Copperfield.
Yeah.
Right? Most everybody knows David Copperfield. Big illusionist out of Vegas, had a show there for a long, long time. He bought a home, which is a record sale in Vegas, for $17.55 million.
Wow.
Million. Not billion. Million. With your pinky to your lip.
Right.
So, I don't know. That's kind of crazy to me. 17 million for a house. Good Lord.
It's great when a magician can did he sell it or did he buy it?
He bought it.
Okay. So he made $17.5 million up here, which is a great feat in itself.
Yeah, right. I mean, that's crazy. I didn't think he was making any money anymore, so he must be doing something right.
Right. I think you know what it is? It's that trick, because he can make $100 just keep appearing. So it's the same $100. So he's like giving the guy in his hand. He's like, okay, 100, 200, and he just counted to, I don't know.
He can rip it in half and make it $200 bills, and then rip those in half and make them $400. Yeah, he's crazy.
So he probably only spent $400.
Right.
Right. Of his own money. Do you take cash or do you take doves? How much do I get for these doves?
Doves or cash or handkerchiefs? You take handkerchiefs?
No, that's funny.
The next one here, this one boggles my mind here. This is something here locally, Scottsdale, a Scottsdale home sold for Scottsdale, the city of Scottsdale actually, bought a home that's located in North Scottsdale. It's right behind the McDowell Mountains. I think it's like 118th Street or something like that, 119th Street, and just south of Dynamite Road, maybe Joe Max or something like that. Although there's not Joe Max out there. McDowell Mountains, big park, a big state park. It's kind of like South Mountain. A lot of hikers and stuff like that, horseback riders, that sort of thing. I think it's actually the biggest state park or biggest park in the state of Arizona.
What?
Yeah, McDowell Mountain, and I think that's acreage wise.
Okay.
It is huge. It is a huge park.
I would think the Grand Canyon.
Well, that's a national park. This is, I think, a state park.
Okay.
So I think it's the largest state park, maybe, or I don't know. I could be off. Maybe it's the largest city park or something. I don't know.
It's a big park.
It's a big park.
Right.
There's wild horses out there. They actually do bow hunting out there for deer that not many people know about. But the city of Scottsdale, there's a house out there that sits on the backside of the McDowells. They actually paid $4 million for this home and are allowing the owner to stay in the home rent-free for the rest of his life.
Oh, is it like a reverse mortgage or what?
No, they paid for it because they wanted, because the city of Scottsdale, they actually put
the city bought it. Wow.
The city of Scottsdale paid $4 million for this home, and they're going to let the seller stay rent-free for life.
That's amazing.
Yeah.
How old is he? Does he need a roommate?
Sean Murphy is his name. He's on the it's a 2,600 square foot home in North Scottsdale near the popular Tom's Thumb trailhead, which they just put that in. That's a new trailhead that they just put in a couple years ago. He's on a dirt road. It's 126th Street is actually where it's at, not 119th. But Murphy will not have to pay rent, but will remain responsible for utilities, maintenance, and insurance according to his contract with the city. Murphy can rent out the house up to 6 months at a time, the contract says. So he's got a lot of freedom there. City of Scottsdale, this is a growing area of Scottsdale. It's kind of up there. There's some resorts up there. I think the Boulders is up there, pretty close to there. Scottsdale Golf Club is up there, which I think Tiger Woods was a part of, a member of that golf club for a while. I don't know if he still is or not. So it's a growing area up there. So the city of Scottsdale definitely has some plans up there, and they probably wanted to buy it now rather than later and only pay $4 million instead of $20 million.
So Sean Murphy is going to be getting a new friend after today. I'm going to find him on the Facebook. And
there you go. Hey, you got a guest house up there? It's kind of weird because I've hiked this trail, and this house is like in the middle. There's nobody around this guy. I don't know how he got the permit. I don't know how he built this home. It's beautiful. It's got boulders around it and everything. It's really nice setting. But he hit the jackpot. He hit the local lottery. No question. All right. So next one here, and this one here, I think, we get a lot of pushback. At least I hear a lot of pushback on this. But this one here, Silicon Valley, of course, California, right? Tech workers are getting home loans for 0% down. So the median sales price in that area, $1.3 million.
Wow.
Right. I've heard of people up in this area of the country making over $100,000 a year and are homeless, if you can believe that, because the cost of living is just outrageous. I've done some podcasts before, Julian Castro speaking to this very subject. So leave it to lenders coming up with some creative ways to help get people financed, even the, I guess, affluent buyers need help, right? Not just low income people need help, because $1.3 million, I mean, really doesn't buy you much. When we talk the medium sales price, 1.3, that's the average. So 1.3 may get you a 2-bedroom, 900 square foot home.
Yeah. You want a garage with that?
Yeah. You want AC with that?
Right.
Yeah.
You want windows? It's like the new build where, you wanted windows?
Yeah. Yeah. You want a roof with that?
With view. Yeah. So this kind of piggybacks this, the 2.0, what is it? I have it written down, the bubble, the theory about the real estate bubble at 2.0.
Right. And we're going to talk more about that because I got some other kind of supporting documents.
Or, I'll wait for that.
Some other articles to this whole thing. Are we in another bubble? Are we getting too exposed as lenders? Are we loosening up too much? You hear both sides, right? The media says it's tightening up still. And then you hear these sort of things where it's actually loosening up. Now, the crazy thing about this is that there's a credit union that's offering 0 down. That's pretty much unheard of for credit unions. They're generally pretty conservative.
Well, I'm sure they probably have some stipulations like a 780 or higher credit score or something. I would imagine that they're not just, I would hope that they're not giving $1.3 million houses at 0%, just giving keys,
Well, it says here, let's see here. San Francisco Credit Union even promises to finance any house priced up to $2 million with no money down for qualified borrowers. The only catch is that you have to work in San Francisco or nearby San Mateo County, and that the home has to be your primary residency. So I'm sure there's other stipulations in there, but there are other companies that are kind of jumping into this. We're starting to get this waterfall effect, this trickle effect, because First Republic Bank, which is based out of San Francisco, they actually gave CEO Mark Zuckerberg a loan with a mortgage interest rate of 1.05%.
Wow.
I mean, that's free money. But you're dealing with Mark Zuckerberg. It's not uncommon for people of his stature to get, preferential, which, I always question that. Like, isn't that a fair lending issue? I mean, why is Mark Zuckerberg getting, now obviously he's probably given like free Facebook ads for life or something like that.
Right. Free marketing
or something like that. But it's like, isn't that a fair lending issue? But somehow or another they get away with it.
Because he's good for it. I mean, they know. Because remember last week, I think I said that he made like $4 million a day every day since the day he was born is what his income is. So he can write a check and it's good. And I think last month we talked about him buying the whole neighborhood, like the 7 houses around him, to kind of build a commune. And that's probably what the loan might be, actually. So I'm not sure.
Why do you need a loan, right? I mean, you're making that kind of I get tax write-off, but tax write-off at 1.05%, how much are you getting written off? I don't know.
Well, it's one of those things where maybe he's on the board now of the bank or something. It's just a way to get in.
Yeah, good point. Because it does say here that he has allowed that bank to open up branches within the headquarters of Facebook.
Okay, so yeah, so now the employees are benefiting from
like the grocery store ATMs within your workplace. Is that correct?
Right.
Or what?
What a great opportunity. I remember last year or the year before, like a church opening a Subway into their congregation side there. So all the proceeds went there. So yeah, 1.05. And now you got all of the Facebook employees. That's amazing.
Yeah, it's crazy. Google has similar things with other banks for marketing stuff. But if low down payment is not just for the low to moderate income families, it's also for the high income families. We don't think about that too much. But there is a need for that. Certainly.
The $1 million. So this is a question for you. The $1 million properties, you do loans. What does a $1 million loan need to look like? Because you can do like several stuff, right? Putting you on the spot here, but if I wanted to buy a house for $1 million, what is it, like a balloon payment? Do you do like a 4-year, 5-year jumbo?
30-year fix. You can do a 30-year fixed on them. But most people who seek those type of finance do like 5-year arms.
Yeah.
They do arms on those deals, maybe 3-year arms. Generally speaking, those high net worth individuals have income coming in. Maybe they're getting a bonus from somewhere, or they have other plans, maybe paying a home off in a short period of time, selling a company, that sort of thing. But they generally require, at least 20% down minimum, as high as 30, even 35% down.
Okay, to get that ARM option. But now we're saying 0% down.
Even 30, even to get a 30-year fix, you got to put, because MI companies aren't, they just don't want to finance. They don't want that kind of exposure. So they typically want those. So I don't know if these zero down come with MI or if they're self MI, kind of thing where it's baked into the interest rate.
That's interesting.
So I don't know, but you do have to put a significant amount of money down on that. And I've got another story that will kind of tie into that here later on here. Now the next thing though, these kind of studies right here they kind of irk me a little bit. I don't know quite how to feel them, but this one I got out of St. Louis. Jacqueline Hutchinson, who's the co-chair of the St. Louis Equal Housing and Community Reinvestment Alliance.
I thought that name sounded familiar.
Yeah, it sounds familiar, right? She's pretty famous.
Yeah. Oh yeah, Jacqueline.
You should know her.
Yeah.
New study finds significant disparities in regions' mortgage lending. Now, this isn't something we've heard about this forever, right? But it says here, if families don't have access to credit, then they aren't able to build wealth, to reinvest in their neighborhoods. Financial institutions like banks aren't investing in neighborhoods, and that leads to a cycle of disinvestment or investment.
You have to have money to invest money or to get money. You have to not need it to get the funds. Yeah, it's the same. It's the whole cycle.
It's the whole cycle, right? The people who need money can't get it. The people who don't need it get it, right?
Yeah, 1.05.
Yeah, 1.05. He doesn't need that low of an interest rate. He can afford a higher interest rate. But now it goes on to say these represent things that strip wealth from our communities that are disproportionately targeting communities of color and representing that they are not mainstream financial servicers. There's no bank that will provide checking accounts nearby. So in this particular area, the banks won't even provide checking accounts to some of these folks, which, I under fair lending laws, we get audited all the time. If you can't get a check, maybe you haven't paid your bills on time. Maybe you have a history of bouncing checks. Maybe there's something more to it than color.
Well,
you know what I'm saying,
yeah, it may be, but and that's why people don't live in those neighborhoods that can afford to move, probably too, right?
Yeah.
I think, remember, we have a guy, Joe, last week that he doesn't have a checking account, and we're the trials and tribulations of getting him financed with sourcing his down payment. So that's the other issue. If you don't have so that's first one. You guys need to have a checking account if you're going to look to buy a house. Let's get that out of the way. Checking account, get you pre-qualified. Then if they're not allowing checking accounts nearby, you have to go 3 miles or something to the nearest bank.
Yeah, I don't understand that. I don't know what their parameters are in getting a checking account. It does say the report finds that race is a significant factor, especially in the city of St. Louis, in determining where mortgage loans and home purchase loans are being provided. The study's regional map that marks locations of home purchases with dots, North St. Louis City and much of North St. Louis County are literally void of any dots. So they've actually mapped out, where the home purchases are actually taking place. While African Americans represent 18% of the region, they only represent 4% of the home lending. So pretty significant, disparity. No, I understand that when you look at the numbers. But from a credit standpoint, if I look at somebody and I don't see their race, I just look at their credit report, and if they don't have what it takes, this is where in 2009, 2010, we needed a better foundation for lending, right? We didn't want to lend to people who showed a history of not paying their bills. Right. And so if you show a history of not paying your bills, whether you're black, white, Hispanic, Asian, whatever, it doesn't matter.
Right.
So this is where the waters get a little bit muddy when it comes to race and lending. Although I'm not saying that there isn't redlining out there. There probably is in some cases, but credit should stand on its own. And so the bank's probably looking at this saying, well, yeah, your credit isn't good enough. You got a 500 credit score. Our minimum credit score is 620
to get a checking account. Right.
Right.
I mean, so, I know that there's a renter's mentality like in Tennessee. So when my investors are looking to buy and hold, if you will, like a good rate of return, because you can buy a property for like 50, 60K over there and rent it out for 700. So it's a great rate of return. I wonder if it's similar, because I follow up with, but I wonder if it's similar up there in the North St. Louis area, or St. Louis as they call it, right? If they have a renter's mentality there too anyway, so they're not really caring about their credit score because they just need a house. And so maybe it is as an investor, maybe it's a good opportunity to pick up properties up there. But
I think it's more of a social thing, right? I mean, in these income areas, you have higher crime rates, you have higher drug use, you have higher prostitution, you have higher incidents of illegal activity. Credit and buying homes just isn't a priority in some of these neighborhoods, unfortunately.
Right.
All to do with attitude. Now, this is where it really started to irk me here a little bit, because it says, however, this report is an indication that is not enough and there is still work to be done, Hutchinson said. Locally, we are calling for banks to create innovative products that provide access to banking in low-income areas. So here you have somebody who's part of was she part of the Housing Reinvestment Alliance?
Oh, Jacqueline. Yeah, Jacqueline.
Right. She's asking the banks to get creative financing. Well, okay, so we do stated income, we do some of these other things, or we just ignore credit scores, and you got money to put down, you get into a home, kind of thing. Aren't we kind of getting ourselves back into that whole situation? Right. And you're asking the banks to do this. You're asking the banks to drop their standards, not for the consumer to raise their standards.
Right.
It just seems a little off to me.
Well, and that's the problem with that scenario. These guys aren't buying over there, and until you train them how to get credit worthy or how to get the down payment that they need, and the desire for them to want to get it, then it's not going to happen. We're doing a thing here in Arizona where it's a pathway to purchase kind of product, but it's a homeless to home owner that I'm working with some nonprofits, UMOM and a few other ones here in Phoenix, where we're going to be spending 2 times a month. We're going to be teaching homeless people that are in shelters how to get their credit up. If they got a job, how to use that money or whatever money to get into the 0% down programs to become a homeowner. So that's how we're doing it. We're not being
It's education.
Standards. Yeah, we're educating them. Like, if you want it, this is what you need to do.
Right, and that's the purpose of this podcast: education. Get the word out there. What needs to happen? So, and then it's up to them. The ownership is on them, not the banks.
Yeah,
that's my opinion. So, okay. So next article here, and this has to do with your neck of the woods, in real estate agents. There are some agents out there, some experts, I guess, who are predicting there could be a shortage of realtors in the future.
Not here.
Not in Arizona?
No.
No. This person is out of Southern California. Says there will be a shortage of real estate agents in the not too distant future, said Mel Wilson, broker and owner of Mel Wilson and Associates Realtors in Northridge. Last year, over 100,000 realtors got out of the business. And 41% of all realtors right now are 60 years or older.
Wow.
That's a pretty heavy statistic. Figures from the National Association of Realtors. Now, this is a well-respected organization, right?
Yeah, I'm a part of it.
And you're part of it. Show that in 2015, only 2% of realtors were under the age of 30. Only 2% nationally. And a 2013 member profile survey from the California Association of Realtors, this is California only, revealed that a typical realtor in California was 58 years old, up from 55 years old the previous year. The realtors are getting older.
Yeah, they're aging. It looks like 3 years for every 1 year.
Yeah.
So, I mean, if you're a realtor at 55, then it should be 56.
That's almost 5 years, isn't it?
Yeah, that's amazing. I'll tell you this, because I'm in my 40s now, and I was in my 30s a couple of years ago. But here, right. So if you'd pulled me in 2013, I would be in the 30 to 40 range, and then obviously I'm getting older. So the trend is people are getting older. The young people that are not, I guess that's what it is, right? The workforce is aging and not being replaced.
Yeah.
And there's a need for it in some areas, not here, because that's why I said not here. It's never going to be an issue here because we have 40,000 or 50,000 licensed agents in Maricopa County for the houses that we have. In fact, I was in San Diego last week talking to a broker, and he's talking about that Arizona is one of the toughest markets for realtors to be successful because there's just so many people. Everyone's got a cousin in it or something.
Right.
And in Vegas, it's a thing too, where you can go to a bar, bartenders got, you got a house, I got a license. The waitress has a license.
Yeah, everybody has a license, right?
Yeah, up there. So when I hear this stuff about it dying down, I'm just thinking I need to probably move to California where the median home is 1.3 million. And now there's no competition because they're all 58 years old playing.
Right.
What I'll do is I'll start a bridge game and then I'll go sell the houses, like get all these 58-year-olds all together, right?
You get an Uno club.
Yeah, come on. Hey, Baccarat, what is it? There's something for something.
But I will say, the study does go on to say, or the article does go on to say, there's a lack of a base salary. A lot of millennials probably want base salaries. It's tough starting out as a real estate agent without a base salary. And most people who are in real estate today really didn't plan this type of career. They kind of fell into real estate, or they maybe looked at it as a second option, and then it became their primary source of income kind of deal. Most people don't aspire to be real estate agents.
It's a shame. I mean, I'm in a great field and I'm in a great business, and it took me a little while to get here, but I just, for what you do and what you accomplish for the families and what you accomplish for the sellers, but more importantly the first-time home buyers that have never thought about buying a house, it's just so rewarding to be able to give people their keys, and we have a good cry when they're signing for their paperwork. It's just I don't know why anybody wouldn't want to be a part of somebody else's life-changing events, but it's been a pleasure being here. So
yeah, no, it is a very rewarding. It's rewarding in different ways, right? That you don't necessarily get. The other thing is said here, many agents lack motivation.
Yeah,
they do. So you run against tough times, and you will run against tough times in real estate. It just will happen. And they don't have that fire in their belly, is what I call it, to get themselves out of it.
They have I'm going to add to that because I've been in the top 2% for the last 4 years or whatever. Mm-hmm. Number one in this office on the west side for the Goodyear office for real estate. And I can vouch that there's 60 agents here at the office, and about 10 of them show up,
Yeah.
So that's 1 in 6. But to treat it as a business, right? If you had a store and you were only open on Wednesdays and Saturdays from like noon to 4 because that's all you're going to put in your real estate business, you're not going to have too many people shopping at your store. So the whole mindset of a business owner, and maybe that's why the millennials or the younger generation isn't, because they don't know what it takes to run a business. The mentality or the discipline to get in there, but I know it.
Training is the other thing too. Training is just like on my side, your side. We can do all the books or whatever, but there is a certain level of training. This is why I think like your team, you guys all feed off each other. You train with each other.
Yeah.
You go through scenarios together. You role play together. You do these sort of things. Those are all training exercises that a normal agent on their own just isn't going to get. A broker may not provide. So
Right.
that can be frustrating too, and lead to people getting out of the business.
It's sad that the real estate genre is kind of leaving. I mean, we have Open Door as a big here, which removes a lot of the real estate need. But we also have people that need us to educate. Even the new builds, I always say that there's the two contracts that happen with the new build, like one with a realtor, one without a realtor.
Yep.
And I'm not sure the difference. I just know that when somebody buys a house without a realtor, their earnest seems to be at risk. I've heard people lose $8,000, or I've heard people lose their down payment. And I know that if they had a realtor, then they could probably saved it, for whatever reason.
Yeah, absolutely. Absolutely. And part of that's education too. Okay, so let's move on to the next one here, because the other big story here, and no, it's not the Olympics, because that's in August. We're talking about July.
Oh yeah, we have to backtrack.
We got to backtrack. The other big story here is the Republican and Democratic conventions, right?
Oh yeah,
that was a big deal. Big deal. So I want to touch base on that, because each one during their conventions put out their platform. And I've always been curious as to which party is better suited for homeownership or to promote homeownership in the United States. And I'm a firm believer that homeownership is really one of the backbones to a successful economy here in the United States, the way we're set up. Now, small businesses is probably the foremost deal in employing people. But then second is homeownership. And that's really what our country was founded on, right? Having your own dream, so to speak.
Well, the fact, let's just do one quick history lesson before you start that, because back in England, the royalty, the monarchs and the dukes and stuff owned the land, and the people would work those lands. It was like laissez-faire, I think is the terminology. People would work the land, but they would not actually own the land. So yes, moving to America gave them the opportunity to own property and value. So I'm interested to see what you found out, what the Democrats or what the Republicans said about homeownership.
So here on the Republican side, it says here, our goal is to advance responsible homeownership while guarding against the abuses that led to the housing collapse. We must scale back the federal role in the housing market, responsibility on the part of borrowers and lenders, and avoid future taxpayer bailouts.
Yeah.
So I agree with that. I think the government should get out of some of the stuff. We've had some discussions about the CFPB and what they do and how they hold lenders back from really doing what they could do to how do I say this? Give an injection into the housing industry, because there's a lot of things that we could do as lenders that would promote housing a lot better. It does say here, for 9 years, Fannie Mae and Freddie Mac have been in conservatorship, and the current administration and Democrats have prevented any effort to reform them. There's been a lot of talk about reforming Fannie Mae, Freddie Mac, getting rid of them completely, maybe combining them into one kind of thing. Their corrupt business model lets shareholders and executives reap huge profits while the taxpayers cover all the losses. The utility of both agencies should be reconsidered as the Republican administration clears away the jumble of subsidies and controls the complicate and distort home buying.
So what would if they merged, what would their like celebrity couple name be? Like Franny? Franny? Freddie?
Yeah.
Fatty. Fatty. There you go.
Mr. and Mrs. What Unison? Is it Unimortgage?
Yeah, maybe.
Or Unisex?
That's not a couple name though. I think Fatty, because that's part Fannie Mae and that's part Freddie. So Fatty.
Fatty Mae.
That's just a beautiful picture anyway, the Fatty program. But the we talked about the last 8-9 years. It happened for a reason. The conservatory, I think, my opinion is, and I'm 100% right all the time, so this is gold. But my opinion is that we needed to get in conserve mode, because what's going on is people were, you have a breath, you get a house, you can buy 5 houses with the same stated income. So you kind of had to take a breath and let's just figure out what's wrong and then fix it. So yeah, maybe we figured out what's wrong and we can fix it now, but I don't think changing anything or changing anything prior to now would have been beneficial because we needed to put a Band-Aid on the market, really.
Well, here's one thing that it did say here that I found very, very interesting. So the Federal Housing Administration, which is FHA, and some people call it the Federal Housing Authority, and they're totally wrong. I correct them every time they say that, but it's Federal Housing Administration, which provides taxpayer-backed guarantees. They're federally insured loans in the mortgage market should no longer support high-income individuals. And the public should not be financially exposed by risks taken by FHA officials. We will end the government mandates that require Fannie Mae, Freddie Mac, and federally insured banks to satisfy lending quotas to specific groups. Discrimination should have been no place in the mortgage industry. I don't know why my sound is going off on my phone. I apologize about that, but
yeah, I used to have that tweet. I might still do when for my notifications, but you're more popular than me because I think my volume's up and no one's doing that for me.
Sorry about that. But I found that very interesting. So what are they going to do? They're going to put an income limit on FHA loans. If you make over a certain amount of money, you can no longer get FHA loan.
Well, the cap here is what we talked about it. $280,000 purchase with 3.5% down is the most that they will.
Amount, though. You can make $1 million and purchase a home for $100,000.
Yeah.
Using FHA. They're talking about if you make over a certain threshold, you can't even consider that as a mortgage option.
So let's tie this into the mortgage insurance premium or the MIP or the PMI, whatever that is for the FHA, because that's mandatory and that never leaves, right?
Yeah, right.
So if we tie that in and we make it only the low income people qualify for it, and they have to pay this MIP for the life of the loan or the PMI, which is the PMI? I forget which one.
Mortgage insurance.
Okay, so
it's private mortgage insurance, which is on the
conventional side. Okay. Right. Okay. So MIP, mortgage insurance premium, MI.
Yeah.
So first off, you have to be lower income, or you just can't be affluent or whatever to get this. And second off, we're going to give you a cost for the life of the loan. Again, tying that back into what we're talking about with the market and like the North St. Louis, they can't buy this house, but now you can buy this house only with this program only. That's why they have lower interest rates, right? Or lower statutes, like 580. Some banks can loan on.
Yeah.
And you need like a 620 for a conventional or something, right? Is that
correct? Correct.
You're the lender, so I'm asking you. I'm 90% sure. Like I said, I'm always right.
20 for conventional, 580. You can go below 580 in some certain circumstances if you put more money down, that sort of thing. But that's typical. Yeah.
But we're going to do it at a cost for you. I mean, it's going to cost you. In fact, it's like 1.35, or did it change back down to 0.85? The MI for the cost of the
monthly MI is 0.85.
0.85. Okay.
Yeah.
So that right there is just a little bit above or a little bit below what Zuckerberg is paying for his full interest. You know what I mean? Like if we did the Porsche, and that doesn't even affect the loan. That's just a kiss every month. Thank you for using FHA. Here's 0.85% coming to us.
Right.
And then if you foreclose, that 0.85 pays off the loan, right? So the lender has that insurance and they get that. Then they go to auction and they double dip. They get that house paid twice.
Yeah.
I mean, I almost said a bad word here.
It's kind of it's a little bit of a mess. FHA was initially set up for first-time home buyers. The inability to save money for down payment, or the difficulties in saving up for money for down payment, which is still a struggle today,
right?
For most people, hence why they use FHA for this. And then after that, you go and purchase on a conventional loan, because the theory is that you have equity built up in the home, and you then turn around when you sell the home, use that equity then to purchase a new home, and you don't need FHA. You can do a conventional loan. FHA guidelines, though, given our economic crisis, because their waiting periods are so much shorter, a lot of people have turned to FHA loans.
Right.
Just financing.
I mean, because if you had a foreclosure, or if you had a short sale or a BK or something, it shaves off years of what you need to wait.
Right.
It's amazing. Yeah.
The rates are much, they're better than conventional financing because of that government insured. The government's too big to fail, right? That's the theory.
Yeah. So they get a lower rate. But it's a trickery because the payment's not lower.
Right. The MI.
But yeah, the cost is higher. Yeah. But the rate is lower, so it's a trickery. Like, I'm getting 3.25 right now, or 3 and whatever it is, 3.5.
Yeah.
With a conventional, it's a quarter point higher. But yeah, it weans off. So
Well, here's the thing, though. Here's where it gets a little distorted, because 3.5, 3.75, and I don't like quoting rates because it
right,
changes.
because it changes.
But low range rates for FHA.
Under 4.
FICO score, the adjustments, the loan level price adjustments for FICO score on the FHA side are much more lenient than they are on the conventional side. So in other words, if you compared somebody to a 620 credit score on an FHA versus conventional, because 620 being the lowest that you can get on a conventional deal, you get a better deal on the FHA side than you do on the conventional side. The interest rate is higher on the conventional side, and the monthly mortgage insurance is going to be higher on the conventional side because of the FICO score. Vice versa, though, if you look at somebody with a 720 credit score, 740 credit score with somebody with a 620 on FHA, they're about equal. So FHA does, if you've got good credit, conventional is better. Long-term, conventional is a better deal because you can get rid of the mortgage insurance, unlike on FHA. But when you're looking at FICO scores and the penalty box phase, if you will, FHA does lend itself to be a little bit better deal initially out of the gate for a lot of people. Hence why they go for it. That's why they move in that direction. So, I think FHA has done a very good service in getting more people into homes. That's why we're seeing the home values increase the way they have over the past few years. I don't think that's a bad thing.
Yeah, I think 70 or 80% of my business is FHA. I mean, without it, then we would, without FHA, would be hurting for certain.
We'd be hurting really bad. Now, this isn't saying that maybe some other creative financing that some Ms. Hutchison is calling for may not replace FHA, but that comes at a risk. That comes at a cost. So also says here, zoning decisions have also been made and most remain under local control. The current administration is trying to seize control of zoning processes through its affirmative furthering fair housing regulation. It threatens to undermine zoning laws in order to socially engineer every community in the country. Now, this statement right here, I would have said before last week on my vacation in Yellowstone, I would have said, what are they talking about? But I had a conversation with some people in Yellowstone, and I was unaware of this. But if you remember in Montana, I think it was in Montana, where they had this standoff, the government versus some ranchers, and they were held up in a government sanctuary.
Yes, the Freeman.
What was it called?
Freeman. I grew up in Montana, so one of the kids in my class, his uncle was one of the leaders of the Freeman. So yeah.
Okay. So now, as I understood, as I was told, and I don't know, you tell me, but as I was told, it was a conflict over water rights for cattle. Grazing rights, maybe, or something like that. It was federal land that the cattle had been able to graze on for a long period of time, and the government said, "No, sorry." And the rancher said, "Well, wait a minute. That's how I make my living,
right?
Selling cattle, and I need that land to beef up my cattle so I can sell them on the market." And the government said, "No, sorry." So they essentially took the ability of those ranchers to earn a living away, right? Now, I've heard the same thing in water rights. A lot of the government is taking away water rights. In Colorado, for example, this isn't in Arizona, but a lot of people have those self-contained, everybody wants to go green, right? So they collect rainwater and they bury this, big tub underground on their property or whatever, and then they pump it out to water their lawns or, whatever. The government in Colorado, that's illegal to do that.
It's amazing.
It's illegal to, and I guess the federal government's also seizing other water rights away.
There was a big story about a guy in Oregon. He was self-sufficient and he was collecting rainwater, and they said you can't do that. It's just asinine.
Yeah, why? What? Now they're Colorado's saying that would affect their water supply.
Yeah.
If every household collected their own rain. Well, if everybody collected their own rainwater, why do I need more rainwater in the Colorado public service? It's asinine to me.
Yeah.
It's just like what APS did here locally. They really lobbied very heavily for everybody who was getting solar, because they saw part of their market share going away, and they won the battle. Really, they really.
Yeah. When does that go in effect? Like next year or something, where they get the increase because they say they hadn't had an increase in a while, but used to be able to sell back, and now you can't sell back. Or
Yeah, you can't sell back and stuff, and it's just now. Some Republicans are playing on that and saying, "Hey, the government's they're the ones doing it. They're the ones taking control of this. You should have the right to collect your own rainwater, for God's sake."
Oh, your own son. I mean,
or your own son, right?
It's amazing. There was that. Well, for the newsmakers for July, the 4th of July. There's a Facebook thing where the park rules for the Independence Day festivities: no booze, no dogs, no having fun. So like, these are the rules for like this park. Celebrate 4th of July and our independence here, but you can't bring kids, you can't bring your own beverages, you can't bring your pets. No fireworks, obviously.
No hot dogs, no apple pies.
Yeah, no smiling.
Yeah, no smiling.
No eye contact.
Crazy, man. I heard this up there on vacation. I'm like, you got to be kidding me.
Yeah, it's amazing where we're at as a. I mean, I don't want to take a spin and be a right wing or left wing. I'm not even sure which it is, but just the whole idea of what government doesn't allow us to do.
Okay, so now we've talked about the Republican side. Let's talk about the Democratic side here. Last week, it says there's a lot more. This is the Democratic platform, and this is just a snippet here because I didn't have time to download the whole thing. These platforms are like, these things are like booklets.
Yeah.
But I did take a snippet here. It says there's a lot more in there about mortgages and home ownership. They promise, the Republican or the Democrats promise to make certain minorities have a better shot at home ownership through stronger enforcement of fair housing and other laws. In fact, all of the sections on the housing include the phrase "people of color." I thought that was kind of weird.
Yeah.
Numerous times they promise to I can't even read this word.
Reinnovate.
No, not innovate. REINVIGORATE. Reinvigorate housing production programs. Presumably ones like FHA. So they want to take FHA to another level where we want to cut FHA a little bit for the wealthy. They are not about to let the Great Recession go on, mentioning how it hurt people and how they would prevent it from happening again. They love Dodd-Frank. Democrats love Dodd-Frank. Republicans tend to not like it. People in the industry tend to not like it. Stating, we will also vigorously implement, enforce, and build on President Obama's landmark Dodd-Frank financial reform law, and we will stop dead in its tracks every Republican effort to weaken it. It is interesting that the speech by President Obama and Elizabeth Warren commemorating the CFPB's 5th anniversary failed to mention Richard Corday. There's nothing in the platform about Fannie Mae. So that's a little snippet of the Democratic platform. That they want to take what's already existent and make it even more restrictive, maybe expand it even more. What would that do to housing? I think the other thing too, a lot of people said with Bill Clinton, the housing in the early 2000s was a direct result of Bill Clinton, him opening up some of the secondary marketing and being able to sell mortgage-backed securities and things like that, which opened up additional programs for people to then get into, which is what the people in St. Louis probably want. But that actually led to the bubble, really.
Yeah.
You do these kind of crazy.
Well, we go back to the security of America. The FHA is it's backed by the government. I mean, that's what really created the bubble is these programs or these ideas that were bulletproof. So let's just get people in houses. Who cares if they can't afford it because they will get bailed out or, my goodness, I didn't realize. Yeah, I understand that this is July newsmakers, so it's all about. I have a lot of opinions on this stuff, so it's amazing. The next 5 years, what the real estate market's going to look like, based on whoever the president is, really. Yeah,
no, totally. Now it does say here too, another separate article. Voters say they want more financial regulation. I'm dumbfounded by this. I got to be honest with you. I mean, sometimes I call our business brain damage. because you just have regulation after regulation after regulation after
Yeah.
regulation. And then the audio industry has no regulation. I bought a car recently. They didn't even ask for a pay stub.
My buddy applied for a car salesman,
Yeah.
and they asked him, "Do you have any qualms about ripping somebody off for $5,000?"
Yeah.
And he said yes. And said, "Okay, the interview's over." True story. He's like, "That's it. Sorry, we're looking for someone else."
Yeah, they can get away with murder. They
Yeah.
have the CFPB. Yeah, they got some things they got to do, but it's just, I don't know. I'm not going to get all fired up about it. I just found that to be kind of like, okay, you want the banks to loosen up, but you want more financial regulation. That doesn't work.
It's the opposite.
Yeah, it doesn't work.
It's like I can eat whatever I want and still lose weight. Those are the opposites.
I'm becoming convinced that people just don't know what they want. They have no idea. And start letting the leaders within our industries tell lawmakers what is needed to.
Yeah. How about like a mastermind or something? Here's what we see, because if they're going to increase, people of color's ability to, that's how they defined it, people of color.
Right.
If they're going to increase their ability to purchase a house, and they're going to add more regulations to, as far as if you produce as much money, then you can't get this kind of loan, or whatever else steps they're going to come up with. It's not going to work out. You can't increase and decrease at the same time.
Yeah.
It depends on how. Yeah, it depends on what kind of regulations.
It's a turbulent world that we live in right now. We still are trying to figure it out ourselves, and we're in the industry, right? So, it
should be on the ability to pay the loan. That's all it should be. Your ability to pay the loan. Now,
what's kind of fueling this a little bit, Equifax says subprime is growing. So there are growing concerns within the credit industry of credit delinquencies. So that will only fuel the fire for tighter regulation, if that happens.
Right. I think we have some 4-year arms that are going to be maturing here in the next 12 months. So I think there will be some delinquencies and maybe some more foreclosures happening.
Yep. Now, on a good note here, condo relief for FHA passes and goes to the president. I think the president did pass this, by the way.
So you don't need to be 50% occupant, or?
Yeah, it's going down to 35% for the association to be owner occupied, which is good. That's a good thing. USDA also gets delegated authority, meaning that every loan that we do, we have to send over to USDA,
right,
to underwrite or whatever. They're actually going to be able to delegate to the lenders to underwrite to their standard and their guidelines. Therefore, it'll take that process out.
I just did a USDA loan that closed last week, and we had it all approved and everything, but it took an extra 8 days for the USDA to, once it's all approved with the lender, to do that. So to hear that would have been nice to have done.
Yeah, that saves 8 days, right? And with TRID and everything else like that going on, that can be you can lose a deal. I mean, putting an offer in on a USDA, and a seller, or maybe the agent for the seller, knows kind of that process and says, hey, we got an FHA loan, or we got a USDA loan or conventional loan. You could potentially be hurting yourself by offering a USDA on that. Now this one, and we're getting to the end here. I know I've got a lot of other stories here, but we're getting to our hour here.
Yeah. Too many stories.
I know there's too many stories, exactly. But this one here, feud goes on over FHA down payment assistance programs. This has been going on for quite some time, where FHA, HUD, Housing and Urban Development, is beginning to really scrutinize these down payment assistance programs that are out there. We talk about, the lower income families and some of these things that need down payment, how difficult it is to save for down payment assistance or down payment for a home. Yeah. And banks know this, therefore they somewhat take advantage of the individual who needs this by charging a higher interest rate to that consumer for the down payment assistance. Now, banks come back and say, well, wait a minute, we got to self-fund these things somehow. So we're going to pay ourselves through the premium, the interest premium. When you go above par, they get a rebate, and they take that money then along with the costs and then pass that on to the next borrower.
That's the I can bring this home because my one of the preferred lenders we use in the Cotton Group, he says, these down payment assistance programs, they're not really that great for his side, let's not focus on that. I was like, well, that's where the market is,
Yeah.
I market towards these clients because they're not aware of these programs, which it puts people in houses and stuff. So I get it, because he isn't charging more. So he's not making but a very, very skinny for all the work that he does, versus a similar file that doesn't require that 0% down assistance.
Well,
Right?
this is a big problem in our industry, right? So and I'm just going to put it out there. Lenders who have these down payment assistance, I have these down payment assistance programs. Unlike other lenders, though, I get paid my commission on the volume of the loan. That's how I get paid. Some lenders, a lot of lenders, at least here in Phoenix, Arizona, when you do a down payment assistance deal, the amount of income generated from producing that loan or originating that loan is very skinny. Therefore, the lenders don't pay their loan officers their full commission on the deal. Therefore, it discourages a lot of loan officers from even offering the program, because the same amount of work, if not more work, is involved with the down payment assistance, yet get paid less.
Right.
And so lenders say, hey, I don't have that program, or I don't want to do that. Or they talk to like yourself, Stefan, and say, hey, look, let's not focus on that. Well, they don't want to focus on that because they're not getting paid on it.
Right.
Rather focus on stuff they get paid on. Now, for me, it doesn't matter to me. I get paid on it either way. I've even taken deals with down payment assistance at no commission. Doesn't matter to me.
Well, for me, it's building business is the same. Like, we don't get paid, but like $100 to do a rental, just to let you know,
Right.
Same amount of energy to
Right.
find a house that is to find a rental. I mean, you move them in quicker, but I always say it's building your business, or it's building your database.
Right.
Maybe Susan needs this down payment assistance, but her parents have a $500,000 house that they need to sell. Right.
Well, and to your point, I mean, I've got a meeting with a realtor this evening at 5:00 because of a down payment assistance I did for a prior client who referred me over to a realtor. There's an opportunity there. So that's what it's for. It's not meant to sustain a business. It's meant to get people in a home and give you another opportunity for contact. That's what it's really meant for. But FHA, to their point, HUD, it's a fair lending issue. Just because somebody has down payment assistance, should they be charged a higher interest rate? And they're going to do some studies. Now, I think that down payment assistance is going to have to go through some revamp on it. Home and 5 went through this last year, right? Home and 5 was charging you get 5% to be used to your down payment here in Maricopa County.
And they took one away right away.
They were charging 2.5 points. I think it was 2.5. Yeah, I think it was 2.5 points in costs just to get 5% for down payment. So then you netted like 3% or something like that.
Right.
Or no, they charge 2%, right? They charge 2% for you to net 3%, right? For your down payment. And then the CFPB came in and said, hey, wait a minute here. You're overcharging these borrowers just because they need down payment. And immediately they dropped 1%, like overnight. Okay, all right, foul, sorry, cut 1%. So now we're only going to charge 1% instead of 2% for you to get to 3%.
I play poker, and you know where this is going. Yeah. But sometimes you bluff, right? And then you get called on your bluff, and all you had is like a queen high. Okay, you caught me. But you can do this once, and this is for all the men out there. You can, like, let's say you tell your wife you're going to be home at 7, or you're at dinner when you're at a strip club. Okay. And then she says, where were you? Well, I was at Joe's Crab Shack. No, you weren't. You were at the strip club. Okay, you caught me. I was bluffing. So you can say you're bluffing one time, and then you can't do it again, right? You're caught bluffing. So it's kind of like that same vein where, hey, we were charging 2. Okay, now we can't charge 2 anymore. Hold on. Now my phone is ringing. So finally somebody somewhere cares about me. There was another thing that you added about that, the down payment assistance. I mean, we can go into the conspiracy theory of keeping the rich rich and the poor poor, because if you need the down payment, my philosophy is if you need the down payment, then yeah, it's going to cost you more. If you can't save, then I think to get the home ownership, to get, like, in our market where we're getting like 30-40%. Let's say you bought a house for $200,000 today, and 3 years from now you can sell it for $230,000, $240,000. It costs you an extra $150 a month to get that equity versus renting. I think it's worth it. If you put no money down, all you did was move into the property, and it's still cheaper than what you're paying for rent.
That's the thing. The monthly right now, at least here in Phoenix and in a lot of places across the country, monthly is your monthly rent is higher than what you can pay on than what your mortgage would be. Right. So it totally makes sense. Okay, so let's. Freddie Mac came out and said that interest rates will remain low for the rest of the year. People are kind of putting that on the election kind of thing. Brexit, whatever. Brexit's over, guys.
Yeah.
Brexit is no longer a factor in interest rates. So if somebody's telling you Brexit, it's not Brexit anymore.
Yeah.
Another thing here too, HUD secretary violated the law.
What?
That
shouldn't happen.
Are you kidding me?
That's like a Republican making out with another man.
Is that Hillary? Is her name Hillary Clinton? No, it's
Right.
Julian Castro. Castro spoke with Yahoo for about 7 minutes on HUD matters before switching to an endorsement of Hillary Clinton. For most of the rest of the interview, the special counsel said that violates the Hatch Act. I didn't even know there's a Hatch Act, but apparently there's a Hatch Act. The question is, what will anybody do about it? Of course, nobody will do anything about it. Julian Castro is not supposed to go to Yahoo and these other places when he's paid to, talk about HUD things and promote a candidate.
Okay.
He's there to be non-biased but focused on housing.
That's why I haven't endorsed my my presidential candidate.
He was actually a top candidate for vice president, but that has since been.
Oh.
He was one of the top names for Hillary Clinton to be vice president. Now this one I really, really love, and let's end on this one. Now, you may have a couple stories, but then we need to wrap it up, okay? But this one I thought was super get your mind going. Should appraisers know the sales price?
Okay, I'm going to answer yes.
Okay, so tell me why.
Okay, my thought is if the appraiser knows. It's always been my opinion, and again, if it's my opinion, therefore it's right. Is right. This is why this is right. The appraiser's job is to value the house and make sure it's worth whatever the two people have agreed to for a sales price. If the house is worth $250 and there's an offer at $260, but the appraiser comes in and says, "Okay, I'm seeing it's worth $250. I see that the offer is worth $260. Can I get there? Can I see this house being worth $260 to keep the deal alive?" Or, because their job is they work for the bank to find out, does this house, can I loan on this amount? And I can say without a doubt, the house is worth $250 and it's a loan for $260. So no, right? Or can I make it work if it's $250 value and the offer is like $230, or I'm sorry, $253, and they're putting 20% down? Okay. The job of the appraiser is to say, yes, it's a safe loan. You can loan $253 on this property, or you're not loaning $253, but if you're putting 20% down or whatever, his job is to make the banks feel good about the loan or bad about the loan. So he needs to know what the price is. You can't just because prices have been going up historically too, right? So. And this will be my last point, then I'll let it get back to you. But let's say there's 5 houses that were for sale. All 5 of them sold for $200, $210, $220. This offers for $230. Now, if he doesn't know the purchase price, he can say, okay, there's a $200, $210, $220. This house is worth $220. But there's no other houses in the neighborhood that are driving up the prices. It could have 5 offers on it to drive up that price for $230. Can he justify $230 if he knows that that's what the offer is? I would hope so, because that's supply and demand. But if he doesn't know that, then he might come back at a $210 valuation and kill the deal, and the homeowners can't buy and the sellers can't sell. I don't know.
Yeah, no, I agree. I mean, I think the appraiser should know the sales price because something's worth what somebody's willing to pay for it.
Right.
So all he's got to do is justify what you're willing to pay for it. If you can't justify it through comps, then it's not worth it.
See, I thought you were going to be the opposite side. That's why I built up this whole argument about why it's great. But that's funny. So we both agree.
I think they should. Because appraisers, that just lends itself for appraisers to be conservative.
Yeah.
And that's not their job. And like some appraisers may not like manufactured housing, for example. And so therefore they may discount the property more than, somebody else would without knowing what actually somebody's willing to pay for it.
Right.
Some appraisers may not like 2 stories versus a 1 story or, whatever. Homes with pools versus no pools. So You've got this personality thing that can kind of weed itself in there if the sales price isn't put in there. If somebody's willing to pay for something, then it's worth that. It's the bottom line.
Let's piggyback that, because last year there was an issue, and it's still kind of an issue. The FHA appraisers were coming in lower than a conventional appraisal because the FHA appraisers were getting like 3 strikes. Then they get blacklisted from the bank. So ABC lender uses this appraiser. He's coming in high. 2 or 3 times and they're getting burned, then they don't use them again. So it behooved the appraiser to come in low for FHA because they weren't penalized for coming in low.
Mm-hmm.
I had a house that was listed for 160. The FHA appraisal came back at 148. The deal fell apart. I put it back on the market. A few days later, got a conventional offer, 5% down. It appraised at 160. So what happened in that week and a half to get that appraisal to 160?
Well, that's
nothing changed.
Well, a different appraiser too. I mean,
right.
Had that other second appraiser been an FHA appraiser, he may have appraised it for, that value.
Well, when it's your food and it's your family's putting food on the table and you get paid $450 to run this appraisal, and I don't know much of that they actually get to take home, but that's what they charge, right?
Yeah.
$450. If I appraise too high, I'm going to be losing that $450 that I'm getting daily for my family, right?
Yeah.
So the whole 3 strikes, I think really scared people. And if you're not getting punished for appraising low, then what does it matter? Let me just come in and appraise low and feed my family.
Well, speaking of shortage of realtors, there's a shortage of appraisers. Right?
Yeah.
We have a shortage here in Phoenix. I know that. I've had turn times that have been compromised, especially in northern Arizona, some of the outlying areas of Arizona or Phoenix. Turn times can be 10 days, 2 weeks for an appraisal.
Right. Well, a VA is like 14 days. They say 14 days.
Yeah.
But even the other appraisers are. And now I'm getting my pin in the mix here, making it famous.
But diving, man.
Right, and freeze. No, sorry, just stupid. The appraiser. I forget what the heck we were even talking about. Just appraisers. Yeah, short of appraisers. Too many agents here that don't know what they're doing. Maybe they should, to produce money, maybe they should become an appraiser or work for a BPO and do their broker's price opinions for these. I predict foreclosures.
That would be good. That would be good. Okay, so so do you have any stories? Anything?
Yeah. Well, I did this last week or last month. This time I typed it. Last time I had it chicken scratch. And when I typed it, I actually just cut and pasted it, so I didn't even bother typing. But it's the 20 hottest markets for the month. Remember, I did that last month. I think it's kind of neat to do. I think like most of them were in California. I'm trying to see that there's a couple ones that added. Tennessee was not on the list last month. Now it made the top 20. Nashville, Tennessee is number 19. And then another California, Fresno, California wasn't on the list, and now it's up to 17. And then which is the biggest jump is, and I'm not going to go through the whole list, but Yuba City. I've never even heard of Yuba City.
Yuba City.
YUBA.
Is that in Idaho?
No, it's in California. Yuba City, California.
California. Okay.
It was not on the list, and now it's number 11.
Well, it was population 3. Now it's population 9.
So right. So hot. It's hot.
300%.
Right. It could be. I'm going to Google that. I saw it on the list here. I thought that was interesting. And I think the biggest drop, let me see what I have for a drop here. Well, Denver went up from 7 to 3.
Oh, wow. That's pretty significant.
Yeah. I mean, because it's a big community.
Yeah.
And then San Francisco dropped from 2 to 4, which is fine. But yeah, I don't know. I'm looking through the list here. Nothing major dropped. Oh, Santa Cruz dropped from 8 to 15. Oh no, actually it raised 15 to 8. Sorry, I'm reading it backwards. No major drops, just whatever the 3 were that were no longer here.
So what is the number 1 hottest market?
Oh, it's same as last month. Vallejo, Valley or EJO, California. Vallejo. Number 1 on the list and number 1 on the hearts. That's what we like to say.
Nice.
Nothing in Arizona, Ohio, Colorado, Minnesota, or Detroit, Michigan is number 13. Fort Wayne, Indiana.
Now, what is this? What is this based on? Is this number of days on the market or?
That's a dang good question. It's based on a number I just wrote. No, just kidding. Right. It's a National Realtors. I think based on days on market and the price values going up. I think inventory, things like that.
Yeah. Inventory.
And I have the article. I will have that for you next month where we can break it down. But let me before we leave. There's an article I read that said larger than expected employment gain in July could boost the recovery in prices for luxury homes. And maybe we can just touch upon that next month. But I think we're talking about the average sales price in San Francisco being 1.3 or Silicon Valley. Mm-hmm. I think this employment gain is going to just fuel that fire, which is great for the market too.
Yeah, we've seen Arizona's had been fortunate here. I think on our under or below national average. I think it's like close to 5% or something like that, which I think it's like 6% or something. So
it depends on who you talk to. I mean, you got Republicans saying it's a lot worse. You got Democrats saying it's a lot better. I mean, to tie in the election stuff.
There's that underemployed, factor in
because who's not applying for the unemployment. That's the caveat there. I want to end with this one because the house on Ghost Adventures
yes, let's talk about that.
It hit the market 2 days ago. So this house is on Ghost Adventures. It's about 20 miles away from here. It has paranormal activity, alien activity, and then when they filmed it, which is, if you're going to look at it, it's season 12, episode 12. It's called Stardust Ranch. They had one of the guys saw like the ships in the sky. We didn't see it, but they saw lights and stuff. And there's a few things that they have electronics that communicated with something, a spirit or an alien. I'm not sure. And then there was some results with bruises on an arm for a lady that slept in the bed, I watched it twice now. But the house is on the market for $2.5 million. It's 10 acres. I think a 5-bedroom, 3 or 4 bath house. I don't have that specific here, but beautiful mountain views and a chance to meet an alien. So, and it's not just the grays. It's
live with an alien.
What's that?
Live with an alien.
Yeah, some say that when you're married, you might be married to an alien because
men are from Mars and women are from Venus.
Yes, right. There you go. So it's on the market today for $2.5 million. I don't know if you can put a price on an alien portal or an alien, but they had horses being slaughtered, and we're going to be marketing this house. I say we are going to be marketing it because it's my listing. I'm listing this house that was on Ghost Adventures. So I'm excited about it, and we're going to be marketing it towards $2.5 million. You can't market it for the 0% down programmers, but we can market it to people that maybe governments or scientists or somebody that really wants to communicate. I was really impressed with the show because it showed, in my opinion, it showed a lot of proof that there was something there. So
Zac Efron or what's his name?
Zach.
I've watched that show. It's on A&E, I think it is.
Travel
Channel. And it's on Friday nights or something like that.
Saturday. You're so close, but you're so off. Yeah, I watch it all the time. It's on A&E Travel Channel.
Maybe I'm watching the reruns or something.
Yeah.
But they do a good job. And it is a scary show. I will give it that. So
they kind of cheese it up, right? I mean, because there's a reported suicide on the property, and so they show like a actor portrayal of someone killing themselves, and then the scary music. But I'll tell you, I was really impressed with what they found. And I've been to the property 3 times now, and I've done a couple tests there. But I was really happy with my confidence in this house having paranormal activity.
Wow. So if you're in the market for a home that has paranormal activity in the Phoenix metropolitan area, you need to reach out to Stephen Cotton at Berkshire Hathaway in Goodyear. Okay, so let's get this show wrapped up here. We're running a little bit late, so tell everybody how we can get a hold of you, Stephen.
Okay, my phone number, once again, 623-236-5843. I'm going to put it on the comment section here since no one's written a comment yet. I'm just going to put that number. And that's the other way I should do for the website, right?
Yep, absolutely.
So that way you can just copy paste it. New-homesphoenix.com is the way to get to our website that shows you how to look for houses for free. Get on there and search houses, and we'll help you find what you're looking for. I'm going to try to shrink that name down from new-homesphoenix.com because it's such a long name.
All right, cool. Well, reach out to Stephen if you're looking to buy or sell a home in the Phoenix metropolitan area. He's a great realtor, knows his stuff, and you should certainly reach out to him. If you want to reach out to me or the show, please do so by visiting my webpage at www.valleyofthesunrealestateshow.com. From there, connect with me on any social media. Call me directly, email me, and certainly I answer all my emails. So please email me. I'd love to hear from you.
You don't pay somebody to answer your emails?
I don't pay anybody, man. It's all me. I'm a one-man show.
If I write an email, you'll it's actually from you, the famous Jason Bates.
The one and only.
Well,
yeah,
with a Y. Jason with a Y.
With a Y, right. So, and if you're listening to this on iTunes, Google Play Music, or iHeart, I don't think iHeart allows for any reviews, but I think Google Play Music does, and so does iTunes. If you are listening to us on those platforms, please write that review, as it is one of the only ways that it helps me improve the show. So until next time, thank you for listening to this podcast, choosing this over all the other. I really appreciate you listening to what we have to say and taking time out of your day to do so. And until next time, happy house hunting, and I hope to see you out there very soon.
That's right.
All right.
Thanks, guys.
Jason Bates, NMLS 220798, mortgage banking license 1796, equal credit opportunity lender. Sound effects provided by soundj.com.
So many sound effects. So many.